Everyone. Today I want to talk about difference between cash accounting and accrual accounting. Majority of small businesses are allowed to use cash accounting instead of accrual accounting. So what is the difference between the two? Cash accounting allows you to record your income and expenses at the time when you actually receive the money in cash and when you actually pay for that expense in cash. And by cash, I don't mean you have to pay actually in cash. It includes bank transfer as well, or whatever form of payment. The basic principle is that you record for your income and expense at the point of receiving the income or paying for the expense. On contrary to that, accrual accounting allows you to record for your income and expense at the point you actually incur that expense, at the point and for income at the point you actually make that income. So let me give you an example. In terms of cash accounting, let's say you are a photographer and you went to an event, you did some photography, and you issued an invoice to the customer. But the invoice had a credit limit of 1 month or 2 weeks. So in that case, if you're following cash accounting, you will not record for that income straight away at the point of issuing the invoice or at the point of providing the service. But when that customer pays you, when that money is received, at that point you record that income. In terms of expense, you follow the same principle. Now let's say you're the same photographer and you bought some equipment for your business. So you will record for that expense at the point you paid for that expense. So let's say you paid for that equipment straight away, then obviously you record for that expense under cash accounting. But let's say if you have not paid for that equipment yet, and the seller allows you to pay for that expense in 2 weeks or 1 month or however much credit limit they allow, then you record for that expense at the point you pay for that expense. So let's say you bought the camera. Let's say you bought a camera now and you have been allowed to pay for that. Your credit limit with the supplier is 2 weeks. You will not record for the expense now when you bought the camera. Instead, you will record for the expense after 2 weeks when you actually pay for it. So that's under cash accounting. If you talk about accrual accounting, in accrual accounting, you record the expense at the point of the purchase, and same goes for the income. So now if you're that same photographer, in terms of income, you will record the income straight away at the point where you have delivered the service and where you have issued that invoice. So at that point, you will record your income. You don't need to wait for the customer to pay you to record your income. And then on expense side, again, same thing. As soon as you have purchased the camera and you've got the invoice, you will record that expense in your books. You don't need to wait for the actual credit term to be over and for you to actually make the payment.